people invest in you first and foremost. And the reason you build a brand around yourself, and regardless of what you do, whether it be real estate or you sell a widget or services or whatever business it is, they will invest in you or invest in your business because they like you and your story and you resonate with them. The deal sort of comes secondarily. It's not the first thing. That it helps cements the process and the package, but initially they get attracted to you because they like what you say and like what you do.
This is episode number 07 of the Multifamily Success Stories podcast. Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
Hey, this is John Bell
And Julian Sage.
And welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is going on, deal makers? Julian Sage here, and I am super excited to be back again with you this week. So we just recently started partnering with a management company, and we're actually helping them fill up their occupancy for some properties down in the Miami area. For those of you that may not know, my partner John Bell and I have a management company, Managed by Lux, where we actually help multifamily owners be able to fill up their occupancy. So we are actually partnering with a property manager in the Miami area and able to help them fill occupancy in their units. Being able to provide executive short-term rentals to traveling nurses and being able to support the local community is a really nice way to be able to give back during this time. Of course, if you're interested in us filling occupancy, or you're just interested in getting into the executive rental, short-term rental space, then you can just go to managedbylux.com for more information. So please excuse John because he is down in Miami working really hard, sweating right now, just getting these properties stood up. So today I had the special honor of speaking with Reed Goosens. Reed is the co-founder of Wildhorn Capital, a multifamily investment company focused primarily in the Austin and San Antonio area. Wildhorn has over $220 million of a portfolio value with 8 properties and a combined unit count of 1,857. In this episode, Reed shares his experience from coming from Australia with a hope and a dream to start in real estate investing and his epic journey along the way. Reed shares how he found his first deal, being an immigrant, and what eventually led him to owning 1,857 units. This is a really great episode for anybody that is maybe a foreigner or someone that feels like they are in a position where maybe they don't have everything that they need right away. Reed is a really good example of just showing the journey that, not having any experience and then coming to the US and, really just making a name for himself, really kind of that American dream. Reed's story highlights just all of the aspects of what it actually takes to be able to start and grow a business in multifamily investing. If you like my show notes for this episode, go to multifsuccess.com/EP07. Or if you like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back to Multifamily Success Stories. In this episode, I have the special honor of speaking with Reed Goosens. Reed, would you please introduce yourself to the dealmaker community and let them know who you are and what inspired you to get into multifamily investing?
Thanks, Julian, for having me on the show. Yeah, look, what inspired me to get into real estate investing was just the ability to have freedom in my life. The book Rich Dad Poor Dad, when I first read it back in 2010, really resonated with me. And my most valuable asset is time. So for me, all the way back then, it was about trying to, I had an itch and a desire to be an entrepreneur, but didn't really necessarily know what I wanted to do. Right, I wanted to have someone pay me live my life, but I didn't know how to actually do that. And it was through reading and self-education in the real estate space that I chose real estate to be the vehicle that I have gone on towards now becoming financially free, starting Wildhorn Capital, moving to the United States, all that good stuff, and much, much more. So yeah.
Can you take us back to, because you're not originally from the US, you came from Australia. What inspired that transition? Was it because of Rich Dad, Mr. Robert Kiyosaki, to come to the
No,
US?
it wasn't. It wasn't actually. So the story is that I graduated university in 2007. My background's in structural engineering. I went straight to London in 2008 to work on the 2012 Olympic Games, but in 2008 because I was obviously building a lot of infrastructure for that. And then in 2009, my visa ran out in London, and I went to the south of France and I started working on the super yachts. If you've ever seen the show Below Deck on Bravo, it's exactly the same thing. I was working for a Russian billionaire, and in that time, I was backpacking through. I just did the running the bulls, and I bumped into this pretty incredible, good-looking girl who happens to be an American girl who's now my wife. And so the story goes that I sort of finished that gallivanting around France and moved back to Australia in 2010. Was in my office cubicle going, I've got so much more to give in life than this. Erica happened to move out to Australia a year later to do a master's degree. And when she finished that master's degree, I was like, I really want to live back in New York City. I really love New York City. I'm falling in love with you. Like, you want to move back to the States together. And that was really the start of moving to the US. It was really just I wanted to live here and be an expat and get a job and just give it a crack for a little couple of years and then move back to Australia. I had no idea that I was going to build a business from scratch and, change my complete trajectory in life. But that's the beauty of backing yourself and going and giving it a go. I quit my job in Australia, my well-paying job, left my family and chased this girl halfway across the globe. So, yeah.
So it sounds like you had a little bit of experience. I mean, going from, so you got this job out of college, and then you were working on the Olympics. So what was specifically your job? Was that?
Yeah, so as a structural engineer, think of it like we make sure buildings don't fall over, right? In earthquakes or wind or movement in soils conditions. For the 2012 Olympic Games, obviously there's a lot of infrastructure that needs to be built. And I was working for a Hatchmont McDonald, which is a big engineering firm in London. And I was working on the Paddington. If you think of Paddington Bear, there's sort of the famous arches, the big train station that was being revamped. And I was just having to be a project engineer on that particular job for a year. So it was pretty cool to live and work in London and get to experience that life, that side of the world. And for all of us, for people who don't know Australians, in our DNA, it's to travel. Like we're so out of the way, down under. Everyone talks and looks the same. So we've got to get the hell out of the country and go experience the world, because it is a big world. But we do like to do it a lot, and hence why I'm here.
How long did you do that job?
It was just a 12-month contract. I only had a 12-month visa, and then at the end of that visa, I wasn't ready to move home. I was, I think, 24 at the time, and my buddy of mine who had studied with civil engineering, he's like, "Hey, man, it's 2008, 2009. The recession has hit. You should come to the south of France and try and get a job on as a deckhand on these super yachts." And I rocked up to Nice in the south of France, had like 700 euros in my pocket and my backpack, and I started walking the docks and asking for day work, and through that I got some money and I was able to stay there, and then I got a full-time job, and I did a whole season on the super yachts and actually crossed the Atlantic Ocean at the same time, because when it's winter in the Mediterranean, all the boats come to Fort Lauderdale or the Caribbean, and so I crossed the Atlantic Ocean, which was definitely one of the most incredible experiences of my entire life. So yeah.
Wow. So technically, your experience at the Olympics was the last time you used your degree, I guess.
No, not technically. When I moved back to Australia, I was back in a civil engineering job, and then when I actually moved to the United States, I got a civil engineering job, and I had a civil engineering job pretty much in 2012, 2013, and then in 2014 when I moved to LA, I transitioned out of civil engineering and structural engineering, and I went and worked for a developer. And the way I did that was I thought to myself, and I'd already started my hustle of real estate investing at the time, but I thought, if I'm going to be involved in this business for forever, I need to be surrounded 24/7 by real estate. And I happened to be a structural engineer on a particular job in Los Angeles that I just contacted the developer and I was like, "Hey, you want a project manager? Because I'm sick of engineering and I want to come and work on the business side." And he said, "Hell yeah, I do." And I was there for about 3.5, 4 years building high-end multifamily, whilst also doing my deals on the side that I'd already started at that stage. And then, branched off. And the reason I had to keep working was because my visa, before I got married, in 2017, my visa, I needed to have a job to stay in this country. So yeah, that was sort of the advice to people listening to this show. And I know we're sort of jumping all over the place here, is that if you can have a skill set, which in my quiver was structural engineering, project management, institutional construction management grade type of stuff, it was very valuable to a developer who didn't have that knowledge that I would have on about how to design and build stuff, but he was yet the developer of multifamily. So he needed someone in his team who knew that sort of stuff and knew construction, and that's where I came in. So yeah.
I was with that. How important do you think? Because I mean, it sounds like you had, you went to college for the skill set, and that skill set really was able to really help transition you over into, one, the U.S. having that stable, reliable W-2 income, but then two, also preparing yourself for getting into, more of the world of real estate. So you still had your side hustle that you were, going out and underwriting deals, but because of your experience at college, it allowed you to be able to position yourself to be an asset. Do you think that you would be where you are today if you had not gone to college, or if you had not had that experience, that skill set, and you were just...
It's an interesting thing. Look, going into uni, we call it uni, college, whatever you want to call it. I wanted to be a vet originally. Actually, I was really into horses, into large animals, but wasn't actually smart enough to get into veterinary school. So I really like mathematics, and I actually really enjoyed studying engineering. But what I didn't enjoy was when I got into the workforce and feeling like that small cog, crunching numbers, determining the stress in a shear wall for a 50-story building, just wasn't sexy, And for me, it was that. Going back to that 2009, 2010, when I moved back to Australia after being around the world, meeting this incredible girl and being stuck in a cubicle again back in Australia, just going, I can't do this for the next 50 years of my life. There was a hunger within inside me to do more and be more. I didn't even know what the word entrepreneurship meant at the time. I didn't even know. And it was, you ask a good question about looking back. And the reason I'm taking such a long answer is that in hindsight, yes. But at the time, it was more like the blinkers just came off. It was more like, okay, I'm in a structural engineering job. Well, maybe what can I do? I'm probably going to be in this job for a few more years because I can't just quit my job and go start doing real estate. How can I build up skill sets? And this is for anyone out there who's listening, who's in a job right now. What type of skill sets can you build today that could help you either transition into your own business of real estate or into someone else's business that you could be a key asset for them in order to help grow their business, as an employee, and get paid more and learn more on the job. So that's really, every job I did have in this country and leading up to quitting my own job was a step forward and trying, instead of going, I hate this goddamn job, well, maybe I could use it and extract some skills from it, use it as a stepping stone to get into, like I did, I emailed that developer. I wouldn't have been able to email that developer if I wasn't a structural engineer at that certain firm in downtown Los Angeles working on his job. You know what I mean? And putting yourself out there and saying, well, hang on, I don't have enough side hustle income going on right now, but I know that I want to be in this business for the rest of my life. Well, let's go get the highest paying corporate job, like Cuban says, Mark Cuban, and learn, sort of be paid to learn on the job whilst doing my side hustle as well. So yeah.
So let's talk about the side hustle. So you started out your first deal within real estate. What was it? What made you pull the trigger on it?
Yeah. So before coming to America, that book, Rich Dad Poor Dad, was really influential. And through that, I started self-educating in Australia, going to local meetup events, and learning about fix and flipping, learning about, increasing my financial IQ. And just before I left Australia, I was really close to doing something in Aussie, like a fix and flip or a lease option. But Erica's visa had run out in Australia, and I wanted to move back to the United States. And so I spent some of the money that I'd saved actually relocating halfway across the world. But when I got to New York City, I was like, within 2 weeks, fresh off the boat, I was at my first RIA event, the Real Estate Investment Associations, and I was blown away at just how much you Americans have access to information. Like this whole tapestry of RIAs around every major MSA around the United States has one, right? You can, and we don't have that in Australia. We had one, there was one meetup I went to in Brisbane, just happened to be the biggest meetup in Australia. And it wasn't even big. It was like 20 people at it. And it just happened to be the city that I lived. So when I first moved to the United States, the access to information that I would have had to pay a guru in Australia thousands of dollars for was readily available for 20 or 30 bucks at the door every Tuesday night, once a month. That I was just like, this is bloody brilliant. And also being in New York City, right? It was fast talking Americans that I had no idea what they were saying. And I had to start to change my mindset about the lingo that you guys use here that I had no idea about. Credit scores, LLCs, EIN numbers, like what? So all those things I had to learn really quickly. But again, it was the ability to see that there was so many, it was on like steroids compared to what I was used to. And I was just like, I just ate all that up, So, yeah.
What's the difference? Like, are people in Australia or other parts of the country just not as, they're just not inspired by real estate, or what's the story?
They are. It's just that there's not as much of a movement. Maybe it's changed. I haven't lived there for 8 years. I couldn't. The same meetup. I still sort of get their emails every now and then. It seems to be going from strength to strength. Now they've got a couple of hundreds of people going to their events. So there's clearly a want and a need. And I remember even going to it back in the day that people from Sydney and Melbourne and other cities around the country wanted them to go and start events in those cities, right? So there's not a need for it. It was just that no one actually did it. Now that could completely have changed today, which I think it has. But at the time, it's like coming from small Brisbane of 2 million people to going to New York City of like 8 million people. And obviously there's a scale difference in terms of your networking events, right? So again, that was probably what it boiled down to more than anything.
So you're in New York, going to the RIAs and learning about, the real estate in the U.S. So, what was the next step in your transition? So you had that technical acumen. Now you're learning the lingo. How do you move forward?
Yeah. So the first biggest thing was barriers to entry. Massive deltas. Like, okay, New York City, San Francisco, LA, parts of Chicago, these types of tier one cities, that's exactly like Australia, very low cash flow, high appreciation, high demand, low supply, right? That's exactly how Australia is all over Australia. But then I saw these secondary, tertiary markets that you can buy $50,000 properties for. I was like, what? That's crazy, right? And being fresh off the boat, I couldn't get lending. So I had to use my own cash, which I'd saved up, which was about $40,000. And I bought my first triplex, all cash, in Syracuse, New York, which the reason I chose Syracuse was because I could jump on a Greyhound bus on a Saturday morning. From New York City, I can get up there in 4 hours, check out a few deals, and then get back on the bus and be back in New York City for a few beers with the boys and the girlfriend, on Saturday night. And and I could afford it, right? That was purely what it was. And I knew that at that stage, Julian, it was like, I've been self-educating. This is middle of 2012. Like, I've been self-educating for nearly 2.5 years now, including the time in Australia, right? So for me, it came to the point where I'd already pushed myself. I'd quit my job, moved halfway across the world. That was a massive leap of faith. This sort of next leap of faith, like, yeah, I got some money. I know I want to get started. I was sort of hesitant to getting the mentors and the gurus and keep paying for education because I felt like I was getting to analysis paralysis. And I just said, you know what? You don't read about, you don't lose weight by reading about it, right? Or you got to open the gym, you got to open the door of the gym and get on the bloody treadmill. And I needed to get on that treadmill, right? So for me, my losing the weight was like, go take action. And that was going to Syracuse, every week or once a month and just starting to learn about the market, how cheap it was. And then I purchased my first triplex for $38,000 all cash, within 6 months of moving to the United States. So
what were some of the obstacles that you faced? Because there's maybe people in positions where they're coming from out of the country and they're coming to the US. They want to, make a name for themselves. But there's all these obstacles. Like you said, the lingo is different. The LLCs, the structure. How did you overcome that to acquire your first?
Well, so that's, look, all of that stuff's a constant, right? Being a math guy, the old formula E equals MC squared, right? The M is the constant. The C squared is the variable, and the variable is us as humans, right? And the way in which we take the information like LLCs and EIN numbers and getting set up and underwriting deals, they're it ain't going to change over year. Like the same methodology is going to be applied in 20 years time as it is today, give or take some nuances here or there. But the action in which I go and use that information is up to me, and I'm the variable, right? So I need to go and take that action. So for me, I also talk to other people who, part of the quote unquote superpower, if you can think about it, is like, Well, I had the international perspective, right? I came here going, wow, you can buy $58,000 properties. Wow, these incredible networking events. And sometimes Americans don't realize what they're sitting on, right? And so it takes someone else coming from a foreign country to go, well, if you're not going to bloody do it, I'm going to go do it. You know what I mean? Like, and go back to I'd already made the big leap of faith, like the jumping across the pond and quitting the job and moving in with his girlfriend that I'd just met, like there was all so much other stuff, trying to find a job in New York City. Like it was just a whole thing, right? So I'd already come that far, secured all that stuff. And then I was like, okay, let's get to work. You know what I mean? So it was all about constantly pushing those boundaries and getting comfortable pushing those boundaries and the little decisions you make each and every day. That's how I trained myself, I guess, if you can say that you learn to, like, the fear of regret, right? That's probably another example. Like what powers me, what gets me out of bed every morning is going, well, I hope I don't wake up when I'm 80 years of age and regret anything, right? And the same thing goes for, well, imagine if I woke up when I'm 70 and go, well, imagine I didn't get on that plane to come to New York City and give it a go. The worst case scenario for me was I move back to Australia and I get another engineering job. That was it. Someone that probably aspires to have a life that I already have. Very, I'm not going to lie, very privileged. I didn't come from privilege, but I worked hard. The average person wants a steady, well-paying, W-2 job. I was trying to get away from it, right? So for me, it was constantly pushing those boundaries, getting comfortable pushing those boundaries. And before you know it, you're like, oh, wow, I pushed that boundary a fair way. You know what I mean? So it's incremental steps each and every day, week in, week out, month in, month out, that over a period of time with consistency, you can start realizing traction towards the goals that you want to go out and achieve.
And that first deal, did you find like the perfect deal and that's why you were able to act on it? Or can you kind of walk us through that?
What's perfect, right? Like perfect for me was it was cheap and I got started, right? Now I'd done the analysis, and on paper it was like a 12 or 13 cap. But what I realized it was Section 8 housing, right? I had no idea what Section 8 housing was. I had no idea what I was getting myself into. Fresh-faced, bushy-eyed, tailed Australian up in, buying very cheap houses. And for me, it was a learning curve. And this was the other thing, guys. It was like I was willing to bet my own money on my first deal, right? If it good, bad, or ugly, and there was some ugly. There was a drive-by shooting at my first deal. There wasn't anything to do with the tenants, but it was still a drive-by shooting. And it was a wake-up call. It wasn't a wake-up call. It was a learning lesson of like, oh, I now know where I'm, like, type of, where I'm investing, and I need to adjust my investment criteria based on that. But for me, it was also the fact that I wouldn't ever get to deal number 10 without doing the first deal. So you talk about the perfect deal. Nothing's a perfect deal. It's about getting off the starting blocks, right? And you're going to have some stumbling blocks along the way. We all do. But you've got to be able to say, well, if I don't get started, I'm never going to get to where I'm wanting to go. And that first deal was a bit rough around the edges, but it got me going. I didn't lose any money. It was my money to lose because it was my own cash, but it got me to deal number 2. That deal number 2 got me to deal number 3, and it's a snowball effect. And you prove to yourself that you can do it, right? And that was the beauty of going out and doing your first deal. Everyone says, well, what's your best deal? It's like, it's my first deal, because I can prove to myself that I did it, right? And I'm not relying on anyone else. It was no one else's money. It was my own money, and I could afford it, which was the biggest thing. I could actually bloody afford it. And I had some great lessons I learned along the way. They weren't failures, they were lessons. And I'll do it all over again in a heartbeat.
Was the fact that it was your own money, was it a driving factor to push you to make sure that you protected yourself, or made it so that you ended up on the flip side of this whole thing? Or was it just one of those things where you kind of said, hey, I can risk it, and it just...
Look, when you have anxiety in life, right, you got to sit with it a little bit, and you got to explore what's the worst case scenario. And the worst case scenario is that it burns down, right? It literally burns down. That's the worst case scenario. Well, it's insured for $40,000 or whatever it is. Okay, so my money's safe. Oh, okay, what's the worst case scenario? If that's the worst case scenario, I'm good. You know what I mean? Like it was my way to go, and instead of paying a guru to continue to teach me, I was learning by doing. And that was the most important thing. Yes, for the first 6 months, it was making some great cash flow. But then, we had some issues with tenants. I figured out, Section 8 housing can be a little bit, it's a different type of game. You need to sort of probably buy more of those properties to diversify your risk. And just understanding, where I was investing in terms of, Class C or D properties, and where is the risk in that? From everything from property management into tenant selection, into making sure that you incentivize people just to not trash the place so your cash flow isn't sucked up. And then also realizing, well, it probably was a 13 cap for a reason, right? The higher the cap rate, the higher the risk. And so all those things are things that I've learnt, but I didn't know it at the stage. I was like, oh, 13 cap, oh, cash flow, oh, great, let's go. You know what I mean? Like, let's get going. But now you can look back and say, well, these are all the things I learnt. And I've thus pivoted over time and done a lot bigger deals. But again, I didn't get to this point without doing that first one and having a few mistakes along the way, or lessons, as I like to say, and getting back on the horse and dusting off the knees and giving it another go. So yeah.
So, okay, that's the first deal. The next deal. Now with these lessons learned, what'd you do differently the second time?
So the first deal number one hadn't actually gone bad yet. And bad's all, it's relative. It wasn't bad. What is bad? I didn't lose my shirt. But the first deal I still had the first deal. I bought the second deal, was another triplex for $45,000. And what I did was I proved to my local bank, First Niagara Bank, if you ever remember that bank up in upstate New York, for those people listening, I developed a relationship with the bank manager, and I showed that, hey, this first deal is, I'm depositing cash. Can I get a line of credit of 25 G's? Get some money out of the deal and buy deal number two, because I'd saved a little bit more money over the period of time in that sort of 6 months before I bought deal number two. And so that enabled me to pull a bit of money out, go buy the $45,000 property, and then there's my second deal, right? And again, the second deal was very much like the first deal, but the slightly different tenant base, slightly different, I think it was still Section 8, but it was just slightly different tenant base, still low cost housing, but the screening was different. And so we were able to make sure we had better screening. And that was an ATM that produced me $700 a month in cash flow every single month without a doubt. So, yeah.
And did you end up keeping those properties?
So I didn't, because one, I then started to try and push myself, right? I wanted to, and push myself through a conversation with a very good friend of mine. He came to New York City at the end of 2013 at this point. So we've been in the country for just under 2 years. And at that stage, I had two properties in upstate New York, and I was just about to close on a flip in Philadelphia. Still working full time, working like a dog, not really, living the financial freedom lifestyle. And my buddy comes down, and I'm sort of boasting to him. He's from Canada. We'd studied together, and I was like, oh man, I got these couple of properties, and earning some great cash flow, thinking I'm crushing it. And he turns around to me and says, oh, that's awesome, Reed. I just closed on a 70 unit deal, and I said, what? And he's like, yeah, 70. And he's like, how the hell do you close on 70 units up in British Columbia in Canada? And he walked me through it. Had a mentor, had seller carryback financing, was applying the same strategies in terms of going in, renovating the units, and increasing the rent. I was doing the same things on my triplexes and duplexes, but I just didn't have the scale. And through all those things, I was like, it's all started. Like, if he can do it, like a mate that I'd known for 5 or 6 years now, I can do it, right? How do I? And so taking little golden nuggets out of me, like mentor, okay, that's what I need next. And I knew I was getting to the end of my tether. I spoke about earlier, using that money that I'd saved from Australia to go buy my first property, because I didn't want to go pay $40,000 for another Robert Kiyosaki course. I wanted to go and do it myself. But I started realizing when I was coming, a year and a half into it, I was like, okay, I'm starting to get to the end of my tether. I'm not, it doesn't seem to be taking off like a rocket ship yet. Maybe I do need someone in my corner that I can run some ideas off. And that's where I liquidated the two properties in upstate New York, made my money back and a little bit more. Great learning experience. And was able to use that in order to then go build my business that I built today, which is around my brand, Reed Goosens. I built a podcast, started podcasting back in 2014, been going for the last 6 years, and trying to grow my investor database by educating people on just literally the things that I was doing day in, day out, right? Like the EIN numbers, the LLCs, educating the foreign investor about the benefits of investing here in the United States. And that was the sort of the niche at the beginning, and now we've pivoted over time, and it's cumbersome everyone. But that was, you asked like how I got to where I was today. It was through those conversations I had with certain key people that I held at very high esteem, that enabled me to continue to push those boundaries again. Remember, we're talking about pushing those boundaries and then saying, okay, Well, if he can do it, why can't I do it? Okay, I need to get a mentor. Well, how that mentor? Well, what do I need to do with that mentor? Okay, that mentor told me about raising money. Okay, how do we need to do that? All right, let's go start a podcast. Well, who the hell's going to listen to my podcast? All right, my mum and my grandma. Great. Just all these things that I would kept doing, kept pushing those boundaries, and just tried stuff. Just kept trying until the old analogy: you throw spaghetti against the wall until something sticks, right? So that was that. I've jumped through a very long timeline there, but that is the period of time, that another transition, and very much the second aha moment I had in my life was that conversation with my good friend about his 70-unit property, which then put a fire under my belly or under my ass to go take more action.
And so your next response was let's start a podcast?
No, the next response was, let's go get a mentor. And the mentor was, okay, well, I found a mentor who I was very frugal at the time. I wasn't spending tens of thousands of dollars on a mentor. I found someone who literally had done one deal and had just started a mentorship program. It was very, very cheap. It was $2,500. And at the time it was a lot of money. And I was like, but what it was doing for me, it was that I was taking a bet on myself again, right? I took a bet on myself moving to this country. It was saying, okay, Reed, you're worth taking a bet on, right? If you can't bet on yourself, who can you bet on? And this is the imparting ways with that $2,500 was more symbolic in the fact that I'm going to take this seriously and what advice this guy has to say. Now, I will say mentors change over time. I have a completely different mentor that I have today than I did back then, but it was taking myself seriously enough to go and invest in myself and have a sounding board and someone in my corner. I already knew that I had the ability to go do it. It was just that I need the validation through a mentor, and I had to pay someone, right? So, as someone might say that it's a waste of bloody money and you already knew it. It's like, well, is it? Because you had someone validating what you're already thinking. So yeah, and so through that mentor, it was about OPM, trying to raise capital, share my story, my journey with other people, and just start by talking to the fact I niched at the beginning with building the brand with to talking to the international folks about the benefits of investing here, because when I open my mouth, I have an accent, right? So that was the niche in the beginning. And they always say in marketing, niche till it hurts and then pivot, right? Niche and pivot, niche and pivot. And so for me, when I started the podcast back in, I think, late 2014, early 2015, no one was talking to international folks, right? And so I was like, well, I could be number one in that space because I'm the only one in that space, right? So that was, again, the pushing of the boundary. And I was an engineer, for crying out loud. Like, I had no idea that how to podcast or build a brand, but it was just taking steps and just doing it and stop second guessing it. And who cares if no one listens to it? Turn it off and no one listens to you. Like, that's the worst thing that can happen, right? Like the moving back to Australia. If I moved out to this country, didn't find a job and the relationship broke up, well, I moved back to Aussie. That's the worst thing that can happen. So yeah, that was a little bit of the start of the journey.
So starting that podcast, or finding that mentor, starting that podcast because you're trying to find ways to be able to, network, be able to use other people's money. Did the podcast immediately pay off? Like, what was that next thing for you to be able to acquire that?
There is no substitution for time. There's no substitution for consistency. There's no substitution for building a brand around yourself. Takes a long time. You can burn it down in literally seconds by doing something stupid, right? So no, it didn't happen over. And with the mentor, I was able to introduce him to a friend of mine that I moved to LA, and I started my own meetup event. So talk about meetup events. I'd started this podcast. There's a couple episodes in. I had moved to LA at the time in 2014, 15. I was starting to get more confidence. I knew that if I started different platforms, people would come to me. So i.e. a platform of podcasting, or i.e. a platform of meetups, that I could be that key person of influence. Regardless if I had limited experience, I could bring other folks on and talk to them about it. And through one of the meetup events that I started, I met this guy and he had a really smoking hot deal in Texas, and he was working full time as an asset manager for another company. He wanted to break out on his own, but he had some experience in that sort of asset management world of multifamily and underwriting. That's where I learned how to underwrite better. And he was like, I want to take this deal down. I was like, great, do it. You should definitely do it. And he's like, but I don't know how to raise money. I was like, well, I don't either, but apparently my mentor does. I should go. Like, he's done one big deal before. So, and anyway, long story short is I introduced them. Initially, my mentor didn't want to do it. But today they've gone off and created a 10,000 unit portfolio themselves. And I was there sort of at the beginning, the glue. And then through that introduction, they did a few more deals, and I helped raise capital whilst building the brand over a period of a couple of years, and then got the confidence to say, hey, I don't want to play second fiddle to these blokes, and good on them that they've gone off and done their own thing, but I want to own my own company. And that's where I went out and started underwriting my own deals, and started with 50 units and slowly built it from there. So yeah.
So you focused primarily, positioning yourself as that value add because you had the platform, because you were connecting people, that allowed you to be able to start raising money. How did you know where to learn how to start raising money though?
But through this mentor, creating pitch decks, and literally just having through conversations, right? Like I remember that first deal that I introduced Joe and Frank on, which is now the partner, these two guys. And at the time, I think I had like 50 or 60 people in my email list that I was trying to build. And I was like, I'm definitely going to raise $500,000 here. Like it's going to be freaking easy. And I went out and I pitched, and literally crickets, like radio silence. And it was a cold shower on the fact that I hadn't spent enough time cultivating the message correctly, and that consistency piece. There's no substitute for time. I hadn't built the base up of followers yet, or people who wanted to know what I had to say and wanted to do, and they even knew what I was, right? Like everyone thought of me as a freaking structural engineer. They didn't know I was going to do real estate. They're like, aren't you a structural engineer? Like the old saying, you got to tell someone 7 times before it sinks in. Like that definitely happened. And I remember approaching 50 people on that first deal. I think 4 people wanted to meet up for coffee, and I eventually had 2 people invest, and I think I raised $100,000. Now, it's still $100,000, still $100,000. It's still a step, but it was just such a cold shell. Like, oh, I've got this in the barn. I've got so many people who follow me, all these 50 people, and it wasn't the case. It wasn't to be. But again, it proved to me that I needed to double down on the message, needed to double down on what I was doing. But there was a glimmer of hope that, hey, someone was interested in what I was doing. And the fact that I should add, lads, is that people invest in you first and foremost. And the reason you build a brand around yourself, and regardless of what you do, whether it be real estate or you sell a widget or services or whatever business it is, they will invest in you or invest in your business because they like you and your story and you resonate with them. The deal sort of comes secondarily. It's not the first thing. That it helps cements the process and the package. But initially, they get attracted to you because they like what you say and like what you do. And that's the point of when I had that cold shower of approaching all these people. I hadn't given them enough information about what I was doing leading up to that before going, hey, here's a hard deal. And like, let's go. You know what I mean? So and people are like, no, I don't trust you yet. And that would all come down to trust. So
is there ever just like that deal that it's just like, it's like you're presenting these deals, are these deals like better than everybody else's deals, or is it just because?
The first one it definitely was. Like I knew it was a great deal. It was a 7 cap in Houston, late 2014, 2,000 built, 250 units. Like it was a great deal. There was some blood on the streets there in Houston, similar today in COVID. But it was a good deal. But the fact was, when you don't have experience, and a lot of it, even with the other blokes in the circle, it's hard. It's a tough slog. And I remember I only raised a very small portion of it, and Frank and Joe, like, they scrambled and did everything they could to get that deal closed. And it's just tough when you don't have that experience. You don't have that track record. But where do you build a track record from? Well, because you got to start with deal number 1, and people take bets on you. So you have to kind of have that smoke and deal in order to say, well, look, this is a smoke and deal. But then they say, well, have you done this before? It's like, well, no, but it's my first deal. And, so that's where to get over that trust mentality. And that's where the podcast comes in, and sharing the message and sharing the story. Then people can resonate with you more. And when they hear you a lot, they can say, I know Reed, or I know these guys, and I trust them because I like what they say, and I like what they stand for. I like what they represent. So that is what's about building a brand. And that's the brand piece of it, in order to help sell the widget. In our case, happens to be real estate, but it could be, think of Steve Jobs with Apple. He had these really crazy ideas, and everyone thought he was crazy when he put a PC in everyone's living room. You know what I mean? Like, but over time, he built that trust, and now I'm literally talking to you on an Apple right now. So like, it takes time, and that's the thing that people don't realize, that when you start down this journey of real estate investing or building anything from scratch, people think it's going to happen overnight, but it takes years, literally years. And if you go into it thinking you're going to do it in 6 or 7 months or a year, you're joking yourself, right? Something that is worth building over a period of time will take a substantial amount of time. Like, remember, I put Capital Book Rich Dad Poor Dad 2009. I didn't actually become financially free and independent till 2017. So, and I still, and that's just, I could replace my W-2 with side money, right? That, I'm not sitting on a beach doing nothing. So, but I was able to go be my own boss. Yeah.
What was more challenging? Was it finding the deal, getting the deal up and running, or was it raising the capital to be able to, and really working on that messaging to be able to find people to, purchase these deals?
My story is a little bit unique, that I'd found someone who had a really good deal, and then I knew someone else that had some money, and we kind of, jerry-rigged it together and made a deal, right? Similar happened with deal number 2, and then they sort of got more of a system going, and that they got off to the races, and I was still working full time, and again trying to do my own thing. For me, when I started to break out on my own, it was more about trying to identify things that I was a bottleneck in, like underwriting deals, right? I was very good at underwriting deals, but I also had a full-time job. I also, had a life to live, and so what I did was I realized that I needed to break out of that role and go and spend $15-20 an hour on some undergrads at USC and hire them in order to underwrite 2 or 3 deals a week, so I can focus on keeping food on the table and the roof over my head. And I was looking at deals in Texas, small 50, 70 unit deals. And I was underwriting them well because I was getting on best and final calls, whilst I was still trying to build the brand and build the business. But the thing that I was losing out on now was the fact that I wasn't local, right? I was this guy from California with an Australian accent, and that's where I needed my business partner, Andrew, who's now, we've gone and built nearly 2,000 units. He was local to Austin, and we met at a conference. We had to compare notes, and we were chasing the same deals as each other. We'd come through, he'd a few years later gone through the same mentor I went through years earlier. So we had a sort of kismet, or whatever you want to call it. We came together, and he had a skill set that I didn't have, and I had a skill set he didn't have, right? So, it's all about identifying things along the way, and seeing a door that opens, like seeing that door that Frank came to me with a deal. I knew it was a great deal because I'd done enough underwriting to know it was a good deal, but I'd never actually done a deal. But I knew that I could connect him with my mentor, and then through that, I was able to help on that first deal. And then at a conference, I met Andrew. And through self-awareness, I was able to realize, okay, I need to stop underwriting deals because I wasn't underwriting enough, and I need to outsource that. So all these little different pieces along the timeline helps build that foundation and those stepping stones towards what it is today. Right. And and it's a long string of time. I've just strung a few different pieces together, but it gives you an illustration of things you have to do and realize along the way as you grow as a person, as an entrepreneur, as a leader, in order to see doors that open and stop being afraid of what's on the other side and just walk through those goddamn doors. You know what I mean? Like, it goes back to I was nervous as hell getting on that plane from Australia, but I didn't even think I'd be sitting here with you lads talking about all this 8 years later. Now, if I'd never got on that plane, where the hell would I be today? Got no idea. And so they're the things in life that give you goosebumps and you think about, but you also have to be living in the moment to know when something comes knocking, open the goddamn door and walk through it. Don't worry about what all that failures are on the other side. There may be, there will be, but you've got to take those steps and keep walking through doors over time.
All right. Well, so you took the leap to jump out on your own. When you did that, what was that first deal? How did you fund it? Was it a great move?
Bloody brilliant move. You know what I mean? And I was doing those. So when I broke out on my own, I was still working full time. I actually had done 3 or 4 deals before I felt confident that I could have the money in the bank to say, okay, I want to go give this a crack for a few years. And back to the visa issue, I couldn't really break out on my own until I truly quit the day job until I got married and got the green card. So, but that first deal was side hustle deal. Back Andrew was he's in Austin, and we were underwriting many deals in San Antonio because we thought San Antonio was a little bit more affordable. with Frank and Joe, I was doing deals in Dallas, but we obviously had stopped doing deals with them. They'd go off and build their own business in Dallas. And we thought, well, let's be in another MSA. It's still affordable, or still relatively affordable. And it just is through sheer numbers of underwriting deals, and just a bit of luck along the way, having Andrew down there, talking to the brokers face to face, going out playing golf on the golf course. Like, he liked that, right? And it was just, again, through the complementary skill sets that we were able to muscle a deal together. Now, that first deal was, by gosh, we had to raising $6.5 million, and it was freaking scary. And we ended up raising, we raised it all, but there was a time where we thought we had a crowdfunding side involved that was going to raise $1.5 million or $2 million. They raised zero. I remember a call from a gentleman, like literally like running out of my office because I was working and trying to take a call. And he's like, "Hello, is this Reed?" And I said, "Yes." And I was like, who the hell is this? And he explains to me he got an email blast from someone about it, and through a company that we were using to get the debt through, and they're going to they were going to find some equity, and he somehow just called me, and through a 15-minute conversation, he invested $1.3 million and filled the gap from that crowdfunding. Like, just these weird things that happen in life, and you're like, what? Like, literally, like the night before, we're like trying to calculate how much we need to actually close. We'll raise the rest of it later. Fate, luck, you've got to have a bit of luck in there somewhere. Like, it's all of the above, like sleepless nights, stresses, stomach ulcers, all that stuff, gray patches in the hair. My wife, I've got a gray patch in the back of my head. My wife just says that's the Wildhorn patch. It's all of the above, right? And you just do everything you can to get the deal done. It ain't pretty, it ain't sexy, but you scramble and you hustle and you roll up the sleeves and get it done. And once it's all over and you close, the next deal becomes even easier, because you prove to yourself you've done it, and you prove to everyone else around you you've done it. And now we're 8 deals in, we're nearly 2,000 units, about $250 million assets under management. And I don't say it to boast. I literally say it to inspire, because I'm just a guy from Australia. My parents are both high school teachers back in Oz. I didn't come from money. I moved to this country on a whim to chase a girl, and I came with limited funds, and I just wanted to give it a crack. And if I can do it, so can the average American. And that's what I'm here to do, is trying to inspire.
So, creating those platforms, having the podcasts, creating the groups, I mean, was that all that you really needed to be able to find, someone to give you $1.2 million over the phone? Were they like a
They didn't even know about They didn't even know about any of that. They literally didn't even know about any of that. It was just literally through some broker who was working on the debt side, accidentally had sent it out to the equity side, and some private investor got it, and we built a relationship over a couple of weeks, and he was an accredited investor, high net worth, and it was like, boom, again, fate of like, we had no idea how we're going to fill that gap. We just thought we'd just keep hustling and keep raising it $50,000 at a time. Don't know, mate. Like, I still to this day don't know how that phone call ever came about, and how a lot of luck was involved. I can tell you that.
Now, where are you positioned right now? Is it the podcast that is really helping to speed up this process, or is it still really you going out?
No, look, the podcast is an element of that. Andrew does a lot of capital raising on the golf course. He's a golf course type of guy. I'm not. But and also I pick my lanes. Like, I like to raise capital, but I'm also a lot better at operations and system building, so through the engineering mindset. So I do the podcast more to help and give back and educate people. And if people come through, fantastic. But we also know as an organization that as we grow, we're at 2,000 units now. We're about to employ our first full-time underwriter. We want to go double the portfolio in the next 2 to 3 years. We probably have got to the end of our bandwidth on one-on-one $50,000 investors, 200 investors in any one deal. We're probably going to go down more the private equity route, which is you take off the training wheels, right? Training wheels, and you put your big boy pants on. We're having conversations with a lot of private equity groups that are saying, hey, when are you going to bring property management in the house? When are you going to be vertically integrated? All these things are exciting to build. But you also, you earn your stripes and you grow up, and your capital sources you might outgrow them, right? And I'll still keep the podcast because I just love doing it. I love talking to guys like yourself. It helps me with feel good. But it ain't, the little investors may not be the base of the business anymore moving forward if we really want to go scale this over the next 3 to 4 years.
So what is kind of, you said, moving into private equity, what's the reason? Do you feel like, it's like a hamster wheel with, raising money for these syndications?
Yeah, a little bit of the hamster wheel, a little bit of strategic value, knowing that one check writing versus 200 is a lot easier to do, and we can scale quicker that way. So but again, you wouldn't be private equity wouldn't come knocking unless we got to 2,000 units. You know what I mean? Like they aren't going, oh, this is your first deal, we'll come and back you. So we've got to this point, and people are starting to pay attention through friends and family writing checks and backing us in the beginning, right? And so it is just the evolution of how you grow as an investor and as an organization, as a real estate firm, that you will start attracting different sources of capital.
And what do you think that is this really the evolution, or do most people stick with these individual syndications, or do most people eventually move on to equity?
Well, syndication is really since the Jobs Act in 2012, like I feel like, and pretty much since 2008, there probably was some element of syndication, but really the last 10 years, it's been a massive growth in that industry. Like it's gone from a very relatively small thing to huge, like everyone knows about it, right? So it is also very new because of crowdfunding and Jobs Acts and all that sort of stuff, that people want to access more to these 1% type of deals that the average Joe wants to get involved in. But when you look at the guys with the grey hair, they go from hustlers like myself and my business partner Andrew, doing the deals, doing the operations, taking small pieces of the pie, but doing more and more deals, to cycling a few deals, making a bit of money, and over time these guys go into private equity and they back young whippersnappers in the future. And that's probably where I'm going to be, in 20 years' time. That's probably where I'm going to be. But I don't know where I'm going to be, and that's also the beauty of living life in the present, is because 10 years ago, I wouldn't have no idea to be sitting talking to you guys on a podcast. And that old saying Tony Robbins says, you underestimate what you can achieve in a year, but you can overestimate what you can achieve in a year, but you can underestimate what you can achieve in a decade. And the last decade has been freaking incredible. I would not change a single thing. And you can let go of the next decade, because the fact is, I know it's going to be, if it was any good as the last one, I know it's going to be just as fun this next time around. So living a little bit in the present as well, and just month by month, day by day.
And did you say that your management is not in-house? You
no, yep. So we outsource third-party property management. I still do all the asset management, but that's why we're hiring we're hiring people into the company right now, so I can focus on building more vertical integrated systems of maybe property management, definitely construction we want to bring in-house, so we can have more different revenue vehicles within the company, not just buying and acquiring assets, construction management, property management fees, all that sort of stuff. And so, really building an ecosystem of businesses in order to have a really stable foundation to grow a platform for all our investors to benefit from.
And is that what private equity is specifically looking for? They're reaching out to you and saying like, hey.
Exactly right. Yeah, they're not reaching out to us. We're reaching out to them. It's a bit of a vice versa. But it's also, when you get to a certain scale, it just makes sense from the dollars and cents point of view to bring it in-house and not pay someone, a third party,
And at this point, though, I mean, you've established yourself. You've built up this really nice company. Is it worth it to try to reinvent the wheel, create these systems to be able to vertically integrate, or is it better to find someone that already has something pre-established and then just do like a equity partnership or something?
Yeah, look, very, very good question. And I've thought about it. We definitely the two ways I'd go down about it is if I could acquire an existing property management company, that'd be the first one, or two, we have a very good, identify a very good regional manager or vice president who's at another third party property management company and say, hey, you're going to be the throat to choke. Do you want to come and run ours and bring them in house? That would be how I'd build the systems, right? Like, I think about the steps that I need to build in order to get to that vertical, to have that system vertically integrated. I do wholeheartedly believe that ecosystems are the foundation of wealth building. Think about, again, back to Steve Jobs, the ecosystems of the Apples, the phone, the tablets, the computers, the iPods. It is an ecosystem of products. The same thing can be applied in real estate. Buying the real estate is just one of the products. The asset management, the construction management, doing the construction, right? General contracting, sourcing materials from China, or outsourcing. That's what we do already in house. Property management. All these things create revenue and feed off one another, and that's what creates, in my opinion, true long-term wealth. It's just about identifying how you go build out individual ones of those different vertical systems in order to be successful. So, yeah.
And what would you do differently if you had to start from scratch?
Literally nothing. And not many people say, "Oh, your mistakes." Like I wouldn't do anything different, because so many people beat themselves up about, "Oh, if I only did this, or if I only started in real estate 20 years ago." It's like, when are you going to forgive yourself and just accept that you're here today? You made the mistakes you have, if you have or you haven't, and just move on and get going. We're not living in the past, live in the present, and keep moving forward. So for me, I wouldn't change anything. I really, and I don't say it to be egotistical. I say it because it's created there's mistakes I have made along the way, or there's the stumbling blocks. It's made me into the person I am today, and I'll continue to. There'll be mistakes in the future. I know that, and it'll continue to make me even a better investor. So, yeah.
Awesome. Well, thank you so much, Reed, for taking the time. What's the best way if someone wants to be able to reach out to you or find out more? How can they connect?
Easiest way is to go to reedgoosens.com. That's ReedGoossens.com. Podcast is up there. Got a couple of books up there, got best-selling books. And then if you're ever coming through LA, you get back on a plane after all this COVID passes over us, hit me up, and you want to go for a beer or coffee, shoot me an email at info@reedgoosens.com.
Awesome. Well, thank you so much, Reed, for taking the time. And until next time.
Thanks, lads. Awesome stuff.
Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.